Well, we hurtle into month and quarter end, and we're at the mercy of some fairly opaque flows playing through, which could cause some fairly wild and mysterious distortions coming through in markets. But we look ahead into Q3, we look at volatility, trends and uncertainty. It's all there. It could make for a pretty lively quarter ahead. Well, at least that's the hope on the dance floor at the moment. Now, we have a look at the US dollar, which is starting to move higher as yields move up and break out of ranges. We've got the we've got the gold price trading down into the bottom of its recent monthly range as well. We've got equity markets holding on by a thread at the moment. And can they crack? Can we go into distribution? Let's break it down in the trade-off. Well, hello, I am Chris Weston from Pepperstone, and I'm going to be joined in 2 seconds from Blake Morrow from Forex Analytics. And we're going to get a bit electional on the markets today. We're going to be talking about what's happening in the dollar, various cross-asset functions that are playing through. It's pretty lively as we go into the end of the quarter where markets have put on a bit of a show. And the NASDAQ typically looks into July and really always rallies in that situation. Will this time be different? Mr. Blake Morrow coming to the programme. I am putting on a special attire for you today, my US postal outfit, my worker's outfit today. We're about to look at the presidential elections. We'll talk about them in the next section. But how are you feeling out there?
Other than I might spontaneously combust on you on air, other than that, I'm fine.
What's happening?
I hear it's
Is it
chilly
hot?
over there.
It's
hot. Yeah.
It's really cold. I sort of looked out the window this morning. I saw 2 polar bears walking past my house. But where you are, it's nice and sunny, eh?
Woo-hoo, boy, it's hot.
Oh, bring on the heat. I can't wait for the Aussie summer, but we've got a way to go. Anyway, I think, mate, let's just go straight into let's go into the market action. Let's check the market pulse. Right, I don't think it's necessarily going to cause... it's a good place to start, I guess. There's a lot going on in markets at the moment, as there always is. But something that's going to be catching some people's attention over the next 24 hours is the US presidential debates. It comes out at 9 p.m. On the eastern side. Now, for me, it's probably not going to be a market event. But what it does do is it starts the process for the election on the 5th of November. Joe Biden at the moment, I think the polls, if you look at the 538 polling average of the polls, has got them pretty much neck and neck. The betting markets, or the prediction markets, have got Trump firmly ahead at the moment because he's probably leading. He seems to be leading in the 6 or 7 battleground states by a little bit of a margin there. But the polls, whether you're looking at Real Clear or 538, have got them pretty much neck and neck. Now, I think Joe Biden is going to need to come out firing. He has a point to prove. Now, microphones are going to be off, so you can't interrupt each other, which I'm sure Joe Biden will relish. But I think he needs to prove to the market and to the voting America that he's up to the job. That age and his health are very much in working with his favour, and he can do this. He is out to prove a point. That's really the big psychological issue for what I think people are going to be looking at. Obviously, policies and various factors. It shouldn't be a market event, but it does set the scene as we go on. How much are you going to be? I don't want to know your political bias. I'm sure you're not going to reveal it, but how much are you going to be watching this one?
I'm not, and no one else here in the United States will be watching. I think actually you and everybody else around the world will be watching it. What a freak show we've got going on. But there's a lot of us here that are not. So I agree with you. I don't think it's going to be a market event. I do agree with you, but to a certain extent, I think the markets might respond positively, risk positively. I think Trump's going to look a lot better. He's going to look more coherent. He might be a little crazy in some of the things that he says, but I think he's going to be more coherent and walk away the winner or looked as the winner. Whether that ushers in some risk appetite and maybe some dollar selling as a result is quite possible. And I'm joking about no one's going to be watching, but I think a lot of people have really, really checked out of this election here in the United States.
Tell me how so many people in America are still undecided on this vote. I mean, surely you know categorically who you're voting for now.
Well, I do personally, but I think a lot of people really are waiting to see, do either one of these candidates actually drop out? Like, does one of them drop dead? And I'm not saying that just to be callous or anything, but you know what I'm saying. Or is there going to be a third party candidate that's viable that comes in at the last minute that saves the day? I think there's still a lot of people holding out hope that there is going to be some sort of change from what we're currently going to be viewing tomorrow night.
Well, I think the polls at the moment, I know you have treat them as you will. The current standing is the market believes that we're going to get Trump in the White House. The Democrats taking the House and the Republicans taking the Senate. So we've got that divided government. We'll see the polling coming out pretty much straight after that 5:38 will do a poll after the view, and it'll give us a sense of who won the situation and if there's any market move. So it's an interesting one, but it's certainly going to be setting the scene as we go into November. Something I'll be watching it.
I'm sure you will. I'm going to be forced to be watching, but I'm probably going to end up watching too. But that brings up our next point is this is a pretty big quarter end. By the estimates that I've read from the banks that I've read, we've got a pretty big 3 standard deviation potentially dollar sell signal coming in at the end of this quarter, and with that, and you got this debate. Could we see some dollar volatility? A lot of people debate that the dollar flows have already been milked through the markets already, which is a scary thing too, because the euro's traded so heavy and the dollar's traded quite strong coming off a corporate month end, that it would be scary if a lot of these month end or quarter end flows have already been done, because that would put the euro a lot lower ahead of the weekend, which we'll talk about here in a bit. But what are your thoughts with this quarter end? What are you seeing over there on your neck of the woods?
Yeah, I hear people saying, you've got quarter end and stuff like that. Yeah, of course, there's rebalancing flows that take place, but I have absolutely never found an edge in hearing what the sell side are saying about the dollar and where these rebalancing flows and how much needs to happen, and aligning my trading strategies with what needs to be done. I've just never seen, or very rarely see, a situation where you can get an edge, because you've got to time it. Yeah, so I don't know. It's something I put in the back of my mind. Price action's all that matters. So if you see the dollar going, with all these month-end flows, then you go along for that. But I've never seen an edge in aligning my strategies or trading bias with what I'm hearing about rebalancing flows. Have you?
Well, I use it for imagine I use the rubber band analogy. When these flows come through, it's like a rubber band, and if it fits into your narrative that how you wanted to play the market, let's say there was dollar selling flows, but you're actually a dollar bull. You use that pullback, on a Friday, late Friday afternoon, to reestablish dollar longs Friday afternoon or Monday morning, Sunday night, or Monday morning in Asia or in Australia.
Yeah,
that's the way I.
So something's moved away from what you consider to be a fair value because of these mechanical flows, these systematic flows, and then you're just expecting a bit of a snapback to where it should be.
That's correct. So I use them to reestablish positions if I think it's going to go back in the direction that I had originally was trading.
I want to bring up the central bank policy, because once we go into the new quarter, it's been a fantastic quarter for, I think probably going to equity land, Hang Seng, crikey, 9%. Who thought that? Best. You came at the beginning of last quarter and said, the Hang Seng's going to be the best one. I want to go into central bank policy, though, because the RBA yesterday were really, really interesting, or certainly the CPI print. We've got the Deputy Governor speaking at 8 o'clock tonight, Eastern Standard Time. He'll give us an understanding. But the headline CPI numbers were above expectations, trim mean at 4.4%. We've got core services numbers at 40 basis points month on month. The market now in Australia is saying, we're fine. We've got to wait for the employment numbers in July. On the 18th of July, the Q2 CPI numbers coming through. But the RBA could be hiking. In a world where other central banks are already cutting or giving a strong signal, the RBA potentially hiking rates in August is a really interesting one. The Fed, could we get one in September? Bank of England looking like potentially August. What central bank has really got your one specific one? Bank of Japan, obviously. It's an interesting world. What one specifically are you looking at very closely, and that's dictating your sort of your trading bias?
Well, it's definitely the RBA, and I'm glad you brought that up, because and looking at the CPI print yesterday or last night for us was it was quite strong. I still remember it was a setup from last week. I still am very nervous with the Aussie around 67 cents. It can't breach it.
You go on, sorry.
Go ahead. No, go ahead.
No, I said it's got big resistance to that 67. It's been time and time. But the Aussie's best trade against the crosses. Aussie Kiwi's been flying. Sterling Aussie is a trade that I like. Aussie CAD, Aussie Yen, they're all working well. But then, the Norges Bank in Norway are also giving a sort of a more hawkish bias. But they're the outliers, aren't they? In this world where the Fed are looking to have a really strong view to cut. The Bank of England have told us they want to cut. The ECB are cutting. There's talk that they may cut 2 times this year. The RBA right now have a headache, and listen to those comments from Hauser, because I think, the ASX is now underperforming. Good pairs trades playing through there, using that as the funder, the short side. So, the RBA for me really now is the one that everyone's focused on as that massive outlier in G10, right?
All right. Yeah, I think it does stand out, and we need to keep an eye on it. And, the last topic real quick, stocks. Look, we lost our leadership here. NVIDIA is obviously looks like it's taking a turn. Micron's earnings just came out. The stock was down. Last I looked, it was down like 6.5%, 7%, 8% post close. And where's the leadership going to come from? And have we topped? And I'm in the camp that we still are rotating. You're seeing some rotation, but at the same time, Chris, I am getting a little nervous about equity valuations and some of these earnings. What are your thoughts on equities, where they stand? Well,
quickly, before we close this out, you're right. The rotation's becoming really rapid. We had energy at the beginning of this week, really standing up and looking the goods. Energy's just been hit. Tech finds a day in the sun, next day it's down. Amazon looks great. Stay long Amazon. Buy Tesla. I'm long Tesla right now. I think that goes up. It's not what I think about the stock. It's just what the market thinks about the stock. I think that continues to go a little bit higher. Apple, I think, probably goes a little bit higher. I want to keep that. Nvidia, I wouldn't be selling that. I think there's probably chances that goes up. So there's some individual stocks, but right now, what we're seeing is the market's just sort of consolidating. I quite like that idea, but the rotation is rapid. It's quick. Every day there's new, and so the market really doesn't know what to do right now, I think, and we're in this period of uncertainty. That said, let's get past this quarter. Let's get into the new week next week. And for the form guide, and this time could absolutely be different. The NASDAQ, let's not forget, for whatever reason, the NASDAQ is up 15 of the last 16 Julys in a row. So it loves July more than any other month. The form guide is spectacular. Will this time be the same, or will this be different? Will the NASDAQ and those tech stocks do what it does best in July and continue to rally? But the rotation is violent. It doesn't last very long. Energy comes up, sell, bang, bang, bang. And so I think the market's really struggling for form at the moment, and that's really interesting. But breadth is terrible, it's woeful, but the market holds in. We'll see. Anyway, let's go to That's a Setup. Well, I'm going to take this away with the yellow metal, the shiny gold. That's not looking so shiny right now. Now, I think what's happened is we always talk about this idea about gold needing a reason. We always have to scratch around. Is it real rates? Is it the dollar? Is it geopolitical issues? Is it China central bank refraining from buying? There's all these different things, and we have to sort of pull out a reason, but price is always true with gold, and that's what effectively we're making or losing money from. So what we're seeing now on the technicals, Blake, in my opinion, you can clearly see that we had those rising, that series of high lows that came through, the rising trend. We've broken through that, and now that is related. If you overlap the charts, you can see it had a really strong influence against the move that we've seen in US Treasury yields, which have moved up. The 10 years broken, that sort of 420, 430 range. 10-year real rates have moved up. The dollar's looking at the goods at the moment, testing that downtrend resistance, and the gold market doesn't like it. I'm short at the moment, gold in Aussie dollar terms, XAU, AUD, but now we've broken that trend, and we're about to test the multi-month trading range lows around 22.83. Now, do we get a bounce out there? That's one for the scalpers to look at for scalp longs. But a breakout through the downtrend, if the dollar does get a wriggle on, we see further upside in yields. Core PCE on Friday, it could be that catalyst. A break through that bottom of the range, I think it's going to get a lot of attention from traders, and it's a big range that we've been seeing. So again, this is a really big setup for me, and I think clients are going to be all over this one.
I think so too, and I think a range extension could take us to a level that would be ripe for buying. So, Chris, thanks for bringing that up. My first setup, and I'm going all strict currency today. It's going to be the euro dollar. Now, everybody knows, and it's interesting. I was just reading a bank piece, and they had this exact same chart, and it's the same chart I've been looking at basically for the last couple of months. I think everybody's looking at it, so everybody understands. You
started that gangster shit, right?
Yeah, I did. Gangsta started right here.
Dr. Dre.
106.50. That's the level to be watching. And that's going to be the level that we're going to be watching really over the weekend. I think that, we'll be trading between this 106.50, maybe 107.25 level going into the weekend. But whether we hold it or not has more to do with the French elections. But the reason why I bring that up is I think a breakdown in the euro is going to usher in dollar strength elsewhere. And we're seeing the dollar really look pretty vibrant against a lot of different currencies. I'll just put it that way. We're going to cover one of those here in just a few minutes. And with that being said, 106.50, we break that. We're probably going to be trading back down towards 105. I think you got to be respectful of our breakdown. And I'm not a French election expert, but I think the market thinks it is. So just I think you got to watch it after this weekend.
Well, I am a French election expert. I've been putting a lot of time and effort into it.
Good. Can't wait to hear it.
No, I mean you've got to manage the risk, right? And the question I'm going to be asking is will we see people? I mean, people are refraining from taking big positions in the euro ahead of that. I mean, there's a lot of uncertainty, but I think that the positive for risk is that the RN party under Le Pen have basically suggested that she's going to be fiscally responsible, that they're not going to go out and blow out the deficit. This idea about deficit slippage was the big concern, and she said that we're not going to do that. That's kind of negated a little bit of what we're seeing. But yeah, I think if the left were to poll really well in the first round election and on Monday, then if they make it through and they look like they've got a chance, then the market may de-risk on that. But I'm not expecting this necessarily to be a huge volatility event. But there is gapping risk for the weekend. If you're running euro positions, CAC positions into the weekend, be aware that there is gapping risk potential there for the Monday Open. That is something that people need to be concerned with. Let's go to the Aussie yen. Bang. Up. If you were a chart, Blake, you would be this chart. Beautiful, but comes with risk. I think that's the issue now is that you do have, this is like, you've got carry, you've got policy divergence. The Bank of Japan may look to raise rates in July. But what does 10 basis points do? It does nothing. The market's very comfortable with a cutback on its JGB purchases. The yen is just getting beaten up left, right and centre at the moment. Obviously, intervention risk is rising. What levels, what circumstances it come through? There's a political impact, because we've got elections coming through in Japan in September. And as we get close to that, obviously there's a risk there. Does this actually help financial markets? But right now, this is as textbook a trending market as you can possibly see. The question is how rich is positioning? Buying pullbacks is the trade. Absolutely the trade. I mean, you've got expectations of rising rates in Australia. Market doesn't care about rate hikes in Japan. This goes higher. The question is how much positioning you want to have if we do see the Bank of Japan intervening. But I don't know. I don't feel like it's going to come at this point, but it's getting closer. But I'd still be happy to hold Aussie yen longs at the moment. But that position sizing needs to be obviously pretty low.
When I read your title, Chris, it said holiday in Tokyo. I'm like, oh, what holiday are they celebrating?
Well,
no, Chris is going on holiday.
Well, mate, you're holding dollars. I'm holding Aussie dollars. So, whichever way you want, wherever way you want to look at it, going to Disneyland in Tokyo is seemingly much cheaper by the day at the moment.
That's what it is. All right. My last setup here is going to be the Kiwi. Now, roll over Red Rover. Send the Kiwi on over, and the Kiwi's breaking lower.
Is that actually a market saying?
It is. Well, no, not really, but it's more of a kindergarten saying. Anyway, what you'll see is we broke the 38% retracement. That came in at 60.80. The next logical stop is at 60.35. We're sitting right now on the 200 and the 50 DMA. I think if the dollar really gains some strength across the board, and you see the euro slump, maybe the sterling trades back down towards 125. This Kiwi's got some downside. I think we test 60 cents again. I am playing it more as a dollar basket play, but I'm playing on the week right now because if you look at the the Aussie Kiwi, man, that thing looks like it's going back to 110 or 109 and 50 or something.
It's going up. It's going up.
It's very, very strong, and the Kiwi's going to take the brunt of it, and so. This Kiwi looks like if we break some of the support, like I said, the 200 DMA, 50 DMA, that breaks, that snaps, we're going to see that 60 handle again. So I'm keeping it on the radar for a short.
Yeah, I think the only thing that's really curbing me in terms of the Aussie and the Kiwi, certainly the Aussie, is that the Chinese yuan at the moment is trending lower. So dollar yuan is, and I think that's another thing. We haven't talked about it today, but the idea that the dollar's getting legs. Yeah, dollar CNH pair is moving up now, and there's a gradual devaluation that's taking place, and that's resonating in further dollar buying. So put that one on your radar because it's a quiet assassin in my opinion. Dollar CNH is moving up, and I think that dollar strength there is resonating in other dollar in G10 pairs as well. So yeah, that's an interesting one. That is trending now. Anyway, let's go to play of the day. Right, my first one is selling the sterling against the Aussie. Why? I think, first of all, just because England are so crap at football at the moment, and it's terrible to watch. Gareth Southgate obviously needs to go, and he will be going after this. But, so getting up at 5 o'clock in the morning to watch England has just ruined me, and it's taken part of my life that I'll never get back. I can talk about it as a proud Englishman. It's been terrible to watch. So I'm selling sterling just because of how bad we've been playing in the Euros, to be honest. But we'd probably win it, despite having actually scored really any goals apart from we've scored 2 goals. Anyway, look, what we're seeing, back to markets. Obviously we talked at length about the attractions of the Australian dollar. Obviously, the risks now, we're going to have the RBA governor, deputy governor speaking in the session ahead. We'll have to see his take on the CPI print. But the market here in Australia is now pricing a 50-50 chance that we get an August hike. We get one full rate hike being priced in by December. You compare that to the UK, which they're opening the door for a rate cut at the next meeting on the 1st of August, 15 basis points of cuts being priced in for that. And they've got 43 basis points, or just under 2 cuts by the end of the year. So you've got that divergence playing through from an economic perspective. There's weakness in both, but certainly from an inflation perspective, you'd be long Australian dollars. But I'm just selling this one because just how bad the UK are, or how bad England are at football at the moment.
All right. Well, the moaning is in my community at Forex Analytics, and obviously in the Pepperstone community as well, led by Mr. Chris Weston. All right. So my play of the day is a position that I don't have on right now, which sometimes, we do these plays of the day and I already have a position, but in this case, I do not. This is my French connection to the weekend. Like I said, I'm no political expert, especially in French elections, but I do agree with Chris. If the far left government, maybe there's about a 25% probability that they have a majority, that would be problematic. You'd probably see it in the Euro Swiss, you'd see it lower, but I'm actually looking for a rally back above the 200 DMA. Swiss National Bank already cut rates. I think they did not like the strength that they've seen in the Swiss. And so if there is a recovery in the euro, some of you might be playing the euro dollar. I will be looking to play the euro Swiss back above the 200 DMA. If we gap back up over 96 cents, I'm going to start playing that back to 97 cents or so. So that's how I'm going to play this particular pair. And remember, this is going to be something that I'm going to be looking to do first thing next week, not necessarily right at this moment in time ahead of the elections.
Nice.
Too much risk to do that.
Nice momentum strategy there. You're jumping on board a train.
Hopefully it's the French connection train. Is there
Very
even
nice.
a such thing? I don't know.
No, there probably isn't. But look, good trade. Like it. Like the idea of buying strength and letting the market, show you that they're happy to buy into it and aligning with that as well. But big risk coming into the weekend. It's a difficult one. It's a really complex. Elections generally are very hard for the market to price risk around. But the French election is very difficult indeed. I think a lot of people are just too hard, move on. No, it's a risk. Let's just avert it and keep that euro positioning very low. So an interesting one. Anyway, we'll be discussing probably how it all turns out next week with a trade-off. Cheers, Blake.